So I have Arnie Diaz with the Diaz Duo at Waterstone Mortgage and Richard Vasquez from Artisan Insurance. I'm Andrew Duncan, your host, and we wanted to start off the show today talking about credit tips and underwriting. There was a specific question that we get a lot, Arnie, and it's, how many credit checks come with a mortgage application, and then some tips that you got for people, some credit tips I think you wanted to relay to some of our listeners.
Yeah, so we get a question a lot of times that the customer does not want us to pull credit again to give them a rate or what have you, and we can certainly give you a range, but in today's age, your rates are really dependent upon your credit score, so we can't really give you a viable rate without pulling your credit. Then the question comes up, is that going to affect my FICO?
But what's going to be more important for your FICO than buying a house?
Right.
I always think that's funny.
But let me put your mind at ease a little bit. If you're in this shopping mode, whether it be a mortgage, a car, whatever, FICO allows you a 30-day period to shop for a rate. So if you're pulling similar type, you're pulling from mortgage companies in a 30-day period, they consider that one inquiry. Okay, so same thing for a car. So that way you don't have to really worry about your FICO score being hurt by that. Now, if it's more than 30 days, that's a different story. But the 30-day period, you're good.
Yeah.
And then a lot of times you'll show on a credit report, collections, and people will tell you to go pay that off. Okay. Sometimes the lender will tell you to pay it off depending on how big it is. So number one, the first thing to know is that if you pay off a collection right at the time you're doing any type of financing, that's not going to be good, because that's going to be a recent view by FICO of derogatory credit, and since that's going to affect your credit. So the best thing to do, if you're made to pay off the collection by the lender, is to wait till the very end, to the closing time, and that way the FICO won't pick it up in time before closing. So
that's a great point. We've run into that a few times. What's interesting about the credit score, I always find it interesting when you have buyers that are like, oh, I'm really, I don't want to pull my credit, I don't want to hurt my credit score. What do you need to preserve your credit score that's more important than buying a house? I mean,
right.
And there's a lot of people that wrap kind of ego around their credit score, like, oh, I got an 824, but it's really a meaningless number unless you're using it. And
right.
What is going to cost you more money in interest rate from a credit score perspective than your house? I always laugh when people are like, oh no, I don't want to hurt my credit. And in reality, the credit score is only as good as the purpose of it.
My loan officers come to me and go, hey, I'm getting killed on a rate here, but somebody else was quoting something, and I go, and the first question I ask them, well, what's the customer's credit score? Well, it's 620. I go, well, I bet the other guy didn't pull credit.
Yeah.
so
yeah, exactly.
Yeah.
So it's funny because we see it all the time where the consumer is hesitant and they're concerned, and last time I checked, you couldn't take your credit score to a bar and get drinks, or you couldn't take it to a restaurant and pay with it, but people become fascinated and attached to it, and it's really, unless you're using it for a purpose like buying the most expensive thing you're probably going to buy,
right.
a house,
right.
It's a useless number, but people get so attached to it, like they're
preserving it for the retirement.
Right, it's like, are we walking around with our credit score on our chest every day?
Yeah.
No one does that.
Right,
So it's kind of interesting when people get so attached to it, but I understand, because you got to work so hard to get it to a number, and people are proud of it, but the reality is that you've got to get it checked if you're getting a home loan, and you got to know it up front so you know what needs to be addressed.
Well, you got two camps. You got people who are real proud of it, and you got people who are not so proud of it, want to know how to get it better, and they want to get their credit score up, and they're renting now. They love to own something, but their credit score is not now allowing them to. So a couple of things there is, obviously you got to start paying your bills on time. But a lot of people don't even have enough credit. So, lenders are going to ask for 3 trade lines.
Right. Which is a credit card, a loan for furniture, whatever it is.
Well, I can't get approved for a credit card. Well, you can, if you got $500, you can put it up in the bank, and they'll give you credit against that,
Right.
So
there's ways. Well, no, and that's the other thing. You're right, because you got to establish a few lines of credit, and that's another tip that I think a lot of people make a mistake about is sometimes it's about the utilization of your debt. You know,
Right.
paying certain things off. You're using too much of your credit. You need to pay some things down, or you need a new line of credit so that utilization of all those credit lines looks better.
Right. You sound like a credit repair guy there.
Well, I'm not. Hey, in the real estate business, let's just face it here.
You have to do it,
In
yeah.
our real estate business, we've pretty much got to
Do everything.
We've come across those scenarios. You guys have helped us with those scenarios.
Yeah.
We've had people do that. So
the big thing is that if you got your credit cards paid to the up to the max limit, that's going to be a negative on your credit score. So you need to pay it down to at least 50% of the limit. So that's one thing we say, that's a real easy fix. Either that, or like you say, apply for a bigger credit line.
yeah, and then you have more
More, right,
to
yeah.
use.